You say it certainly is one of the more complex macro geopolitical environments that I think we've seen in quite a while, with some different moving parts. But to be honest, from the first day of the quarter to the last day of the quarter, we saw zero difference, steady demand. How is that possible, including a government shutdown?
Yeah, Jim, it was an exceptional quarter for our teams. They're executing incredibly well. We saw tremendous balance around the world. I mean, our Europe, Middle East, Africa orders grew 11% in the quarter. Asia was up 6%. The Americas grew as well. So we saw, phenomenal balance there. We saw balance across our technology businesses and really balance across the customer segments. And again, we were looking particularly in January because we have the unique situation of having the third month of our quarter in January, and we were looking for any sort of shift in the demand from our customers, and we just saw nothing. We saw exact same performance in January that we saw in November and December as well. So really pleased with how the teams have executed, particularly in light of all the complexity out there right now.
Chuck, you're changing your model rather rapidly, and I'm not sure people understand it. For instance, 65% versus 54% of your software is now subscription. Can you tell people what that means for your margins and for your forecasting ability?
Well, Jim, what it really means is that we have an opportunity to, first of all, for our customers, we'll deliver continuous innovation through these software offerings during the life of the subscription. But then from a business perspective, what you haven't seen yet is the opportunity for us, in 2021 and 2022, when the bulk of this begins to come back up for renewal, we're going to have an incredible base of software that we'll get to go renew. And that's different than what we've done for the last 25 years, which is, really where we've had to sell 80% of the revenue that we achieve in any given quarter, we had to sell during that quarter. So this gives us an opportunity to revisit, continue to deliver innovation, and then remonetize the software assets that we have sold to our customers.
But I want people to understand that there was a downgrade the other day. Chuck, I'll do this because you're too much of a gentleman. The downgrade the other day was very really very ill-advised, and talked about your forecast may not be that positive. But Kelly Kramer, who is your dynamite CFO, actually talked about margin expansion from the decline in DRAMs, and you gave one of the best forecasts for any of the technology stocks I follow. It looks like margins going up. You have a lot of money. You obviously increased the buyback by dramatically 3% yield, and yet you still have $40 billion in cash?
Well, Jim, we had balanced growth across our security portfolio, which was the fastest growth we've seen in our security business in roughly 4 years. We saw tremendous growth in the applications business, up 20+%, and we saw strong growth in our core infrastructure systems, which was one of the big priorities we had a few years ago, which is how do we deliver enough innovation back into our core so that we can grow those big franchises in addition to growing the markets that we've expanded into. And I think we saw the results of that come through this quarter. And obviously, our commitment to capital returns are still there, raising the dividend, increasing the buyback. So overall, it was a very good quarter for us.
One thing that in the conference call people talked about was that you do compete against Huawei in some parts of the country, parts of the world, not in China. And you gave an answer that I thought was a little circumspect. I just want to drill down a little more. If a major telco outfit is trying to choose between Huawei and Cisco, have you noticed a level of discourse which has just said, you know what, we ought to go to Cisco because we need safety and security?
Jim, what I said was that we haven't seen any material impact from all of the noise in the system around this topic. But what I've also said is that we don't need anything else to actually beat these guys or beat any of our competition in the marketplace, because we have been building tremendous innovation over the last few years. I said yesterday that I think our portfolio right now, the innovation across our portfolio, is as good as it's been in years. And so I believe if you look at the numbers and you look at our service provider business in both Europe and Asia where we compete with them, we're both positive. So we are able to compete. We have new technologies coming out this year to support this 5G transition that our customers are going to begin to go through. So we feel very good about our ability to win based on our innovation.
All right, well, Chuck, it's David. I don't want to get an advertisement from you, but give people a sense as to what you're talking about here when you say innovation and when you say that you're able to effectively compete with Huawei or whether it's ZTE in these foreign markets. What would be an example of a win where it was based on the innovation that you're talking about?
Well, if you look at what's happening right now with 5G, we have several customers who are in trials with us around our packet core, which is effectively where we terminate the mobile call and convert it to IP. We have new platforms coming out. Just think for a moment about the capacity in the core networks that is going to be required when you start delivering 1 gig, 2 gig, 3 gig to every endpoint, from mobile devices to IoT devices to branches. The capacity in the core is going to have to increase significantly. And we have been building next generation platforms for almost 4.5 years now that actually will allow our customers to build that next generation core network to support 5G. So those are examples, but we're also doing it in our enterprise, campus switching portfolio. I mean, our switching business last quarter, we talked about on the call, was up double digits. And this is a business that 3 or 4 years ago people didn't believe could grow at all. So I think it is truly just shows that innovation matters, and that's what we're delivering to our customers.
Chuck, I'm glad you mentioned 5G, of course. We talk about it a lot here. Yesterday, our viewers heard about it in the context of John Ledger talking about its importance to allow the Sprint and T-Mobile deal to occur. What are you seeing here in the U.S. in terms of the actual build-out? Can you give us any sense as to a timeline, given the different views we get from the telecom executives and what their plans are?
Well, I think what you see happening in the U.S. as well as around the world is you're seeing proof of concept trials out there in major markets where they're delivering 5G to next generation mobile devices. We'll be rolling out trials with certain providers here over the next month or so. And then what you'll see is the extension of that to branches, to small business environments. And then I think you'll see the integration of 5G connectivity into the existing networks initially, because the volume won't require a dedicated separate network. But then as they begin their broad-based rollout over 2020 and beyond, they're going to build dedicated 5G backbones to actually support the capacity that's needed. And we think that's where we'll begin to see some uplift from that, 2020 and beyond, when they start to build out these next generation networks.
Well, Chuck, one last question. You have a good, I'd say that you're very close to the trade talks. And we're always trying to figure out where we are in terms of positive, negative. I know you care passionately about intellectual property. I know you think China's important, worldly guy, but also, frankly, I know that you know this skinny. Where do you think we are in terms of getting a deal, say, in the next 5 months, not the next 3 weeks, the next 5 months?
Well, I've said all along that I think it's clear that, China needs this deal, the U.S. needs this deal. And I think some of the news that we've heard over the last few days would support the fact that we're trying to get to a resolution, I think, from both sides, and that's good news. The China market's incredibly important to us. Intellectual property is important to us, but it's important in every country around the world. And in fact, some of the most recent intellectual property challenges we've had have been right here in the United States. So we need to solve that globally. But I think that as you look forward, I think it's clear that both sides are saying the right things. Both sides are negotiating in good faith, and I believe that, at a minimum, they'll make enough progress to where our president can hopefully extend the deadline and keep negotiating to get to a deal in the next couple of months, and we can move forward and continue the expansion of this global economy that we've seen for the last few years.
All right, that's true. I'll leave it there. That's Chuck Robbins, the chairman and CEO of Cisco. Chuck, congratulations on a really unbelievably great quarter, great forecast, too. Great to see you.
Thank you.